every time I spend anything on my card, it's like you can easily just spend away and not really realise until it's too late.
I realised that when it came to money, I was either, obviously you learn a lot from your parents and like your family and those financial experiences, whether directly or indirectly.
The difference between a need and a want. They'll spend less, they'll save more, invest more, they'll be in a much better financial position. Welcome back to another episode of The Way of Wealth. Our second episode, and the first time that we're having a guest on our podcast. Welcome, Niaz.
Thank you for having me.
You're welcome. Just a quick introduction to Niaz. He runs a multi-asset platform?
Multimedia channel.
Multimedia channel. So not only is it a podcast, but it's a production house as well. It's called Millennial Money. And you've also recently launched a new podcast called Loose Change.
Yes.
And it's all to do with improving financial literacy and anything else?
Yeah, just helping people get financially fit and trying to get people to engage with the money conversation.
Perfect. And we were on a similar mission as well. And in preparation for this podcast, I was thinking about, just a quick introduction to Niaz in terms of how we know each other. Almost 20 years ago, we went to the same school. And it got me thinking about what we learnt in school. We learnt a few useful things, but some things that I wish we were taught. So, for example, all of this stuff, financial literacy. So if I just dive in, what do you think, looking back on school, what do you think, if you could go back in time, what financial lesson do you wish you had learned in school before entering adulthood?
Bro, so many, man. It's crazy that you said 20 years that we've known each other. I almost had to do the maths again when you were like, yeah, it was 2008. So it's been some time. We've become entirely different people in that time. But I do think about school often because they're such formative years. And it's a good question to be like, what do we wish that we learned then? Because it makes you think about all the stuff that we didn't learn in school. And we actually run a workshop called What They Don't Teach You in School About Money.
Okay.
Which is pretty much everything.
Yeah, exactly,
right?
Yeah.
And it's a topic that I think cuts through almost every single experience in our lives.
Sure.
But for the life of me, I couldn't tell you a money lesson that we learned in school. No. So the full breadth of everything, I realized that when it came to money, I was either, obviously you learn a lot from your parents and your family and those financial experiences, whether directly or indirectly. But everything I pretty much learned about money as an adult was through making mistakes.
Yeah.
So in brief, I wish we learned the basics of money.
Sure.
All of the basics of money
right.
In school, so we could have been properly equipped. What about you? I don't know if you had a similar thing.
Yeah, in preparation for this podcast, I've read this. I'll leave a link in the show notes, guys. But it's a charity called Young Money, and they've built a curriculum, an entire curriculum, all the way from 3 up until 19 years old.
Wow.
And one of the things that jumped out to me is not just what you just said about how money works, what money is made out of, the future of money, all of that. But for example, just to give you one idea, regarding saving and borrowing, I understand it's important to consider any risks and potential consequences before borrowing money, including the impact on my feelings and those of others. And that's that last sentence, which is
yeah.
I don't even consider that now.
Yeah, it's mad, isn't it?
If we're taught that in school, to think about, I'm kind of half joking when I say this, to think about how many relationships or marriages that could save. Because if you're borrowing responsibly, then that has a better impact on your own financial well-being, your own emotional well-being, and then those of others around you.
100%, man. And I think over time I've actually grown to recognise our privilege.
Yes.
In those experiences, because I think even looking at where we went to school, the kind of influences we had around us, there was a lot of things that felt very normal, which I've learned as an adult that aren't. Right? We grew up with quite a lot of privileges, which felt very normal, loads of financial privileges, and actually because of where we went to school and those around us, we felt like we probably had less a lot of the time because there was obviously excessive wealth.
Sure.
In that environment. And actually then realizing in adulthood that majority of society don't have some of the experiences and opportunities that we had.
Yes.
Right?
Yeah, definitely.
So the impact on those around you, that again was another lesson that was learned over time, right? And I'm continuing to learn now. I was speaking to my cousin who's a similar age to me, and he was like, engaging with other people, getting married, and like seeing how other people operate with money, you realize that not everyone can behave a certain way with money.
Yeah.
Not everyone can be so careless with money.
Sure. Yeah,
right?
exactly.
And people attach a lot of like self-worth, identity to, as you would, to because
Yes.
it permeates through everything that we do.
Sure.
I definitely think that's one of the things that I've learned as an adult,
Yeah.
that behavior around money impacts so much more than what we might think. And normally, especially now in the UK and like Western society, we tend to think, what's my money, I can do what I want. Yes, yeah, you can, but you don't realize the wider implications of how your behavior with money can impact society at large, but even on a closer scale, your family and then friends and others. But there's so much I could dive into on that because it really did make me think.
Yeah, no, it's a big topic. It's a really interesting topic. And I was thinking, what's one of the first lessons I learnt when leaving school? And it's definitely got to be budgeting. Just being disciplined with, okay, I've got, and I remember when I went to university, I received, what was it? Maintenance loan, I think it was. And then basically being really disciplined with that, because living in London's not cheap, even 10 years ago. So it was like, okay, I'm getting X amount a month. I need Y amount for food or for going out or for Freshers Week or whatever it was. And I remember keeping a spreadsheet and then labelling it all different colours. But even though it was quite basic, it was really helpful to do that. And then, things have evolved with technology and stuff like that. And now we've got apps. And then even more so, we've got open banking. So the benefit of that is now you can securely connect an app to this app. And now every time I spend anything on my card, it comes straight through the app. I can automatically categorize it. It's just a habit that I've built over
100%.
about 10 years.
It's
so helpful.
Absolutely.
Just to keep track, because if you don't keep track, it's like you can easily just spend away and not really realize until it's too late.
Well, you were years ahead of me, because if you ingrained those behaviors at university, bro, it took me years after uni to learn those lessons. And so the difference, I guess, with our journey and how we've built this platform is me and my co-founder, Shaq, who's actually one of my best mates from uni, we have very similar experiences. We were bad with money. We did everything wrong. So we graduated, got good jobs, and just kept getting ourselves into more debt, and never budgeted. And it was seeing the outcomes of behaving like that, that we were like, what's going on? We followed everything that we were told to do. Got good grades, went to good unis, got good jobs, got good salaries, but I just don't have any money. I don't know where it's going. And never budgeted. Didn't see the point in it. I thought, oh, that's so boring. Why do I need to do that? It's not for me. Put my head in the sand. And then when I was like, okay, I need to fix my circumstances. I need to realize where I'm going wrong. Budgeting was the first step in actually holding myself to account. And that's what we refer to it as. Finally, you're putting it right in front of you. So the numbers don't lie, right? When you have that spreadsheet initially, I still do mine on a spreadsheet, because it forces me each month, or actually now I do it like weekly-ish, because I like to track as I'm going along. I can't kid myself with where my money is. I'm constantly financial planning, and months in advance. I'm like, okay, this is actually how much I have. I can't imagine where some money's going to come from and just spend it now, which is what I used to do. Because you have credit cards, right? So you have access to capital, so you can just. This is the issue. You can spend much more than you have and much more than you earn. And it's a big trap in the UK.
Get into trouble.
Exactly. So the budget was the first way of like actually holding myself into account, and holding my own behaviour to account. And it completely transformed my financial outcomes.
And financial well-being and emotional well-being as a result.
100%.
The amount of people I speak to, the amount of prospective clients I speak to, because I have to ask as part of the process, what's your non-essential spending, what's your essential spending? The amount of people I speak to who just don't know. And they're really just, licking their finger, putting their finger in the air and guessing. There's very few people who keep a spreadsheet or who keep track of all of these things. And I can imagine if everyone did budget, let's say it was a legal requirement, statutory law, everyone needs to budget. Everyone would probably spend less because they'll realise, and in fact I'll come on to that in a second, the difference between a need and a want. They'll spend less, they'll save more, invest more, they'll be in a much better financial position, not just now, but more importantly in the future too. And I think going through that curriculum yesterday, one of the things, not just budgeting, but one of the things I wish I was taught earlier is definitely the difference, deciphering the difference between a need and a want. You know, is this going to benefit your life? How much utility does buying a nice shirt have on you? Can you go without that shirt for another few months, for example? And if you really do need a shirt, if it does have utility to you, coming back to the budget, let's say an expensive shirt, 100 quid, and you can only budget £20 a month. Okay, well, I just need to save for 5 months. That would have been a game changer, I think, if I learned that at school.
Yeah.
But yeah, I think just like you, I learned through mistakes. And I think it's the biggest mistake that I made was not being able to decipher between I need this
Wants and needs.
I want that.
Yeah.
I still do it.
It's impulses, right? And look, I still like understand my own behavior and the kind of person I am. Yeah. I'm not great at like being frugal. Sure. And I know I'm like weak to my impulses. Yeah. And I just know that I have to factor that in. Yeah. Or I have to make more money. That is, because personal finance is personal, right? And everyone's going to behave differently, and there's no point like trying to be like this is the only way to do it, because it's not. You have to leave some leeway for yourself based on your own preferences. And me knowing what I'm like, I just limit as much of the personal discretion that I give myself as possible, but leave enough room in there to be like, okay, here and there, if you make some mistakes or errors or lapses in judgment, it's fine, because I've accounted for that as well. So I think that's also important. Like, if you know that you're not or if you're someone that requires a bit more flexibility, factor in a level of flexibility for yourself. Has been helpful for me.
Speaking of flexibility, do you keep an emergency fund?
Yes.
My man. Of course. The amount of people I speak to who don't have an emergency fund and who don't consider it important. I mean, the worst case is, you have a car accident or it's just something happens in life and you require a lump sum of money, but your money's tied up in crypto or an investment or anywhere you can't access it, and you need to take out high interest borrowing, and it can really mess up again, the financial position, therefore their financial well-being, therefore their emotional well-being. So, I mean, as a rule of thumb, I say to people, very roughly 3 to 6 months expenditure. Keep it in your current account. If you have to set up a separate account so you don't touch it, do that.
Exactly.
But that
well,
really
you can have
helps.
different buckets in the neobanks now, for example, so you can split it into a different pot but have the same current account, right? Which
so a high interest one and then a
no interest. So obviously I don't put mine in an interest account. I just put it in a current account. But on Monzo, for example, or Starling or Revolut, you can split it into pots. Right. So you can have a pot where you're like, okay, this is my emergency fund. This is my spending, my normal spending, and that way you kind of isolate those pots and you associate a usage for each bit of money that you have. For me, that's helpful because I'm, again, ill-disciplined. And if I have all my money in one place, I'm going to spend it.
Exactly. One thing we didn't learn about in school as well was investing. We learned about interest rates, and I very vaguely remember about how, a particular growth rate can compound over time, but we never learned, well, where do we get that from? How do we go about doing that? What's your story when it comes to investing? How did you start off in investing, and how did you find it?
So I had no idea that I was investing for some time and didn't realise it, which I think is the case for a lot of people, because obviously I was working.
Your pension?
On my workplace pension, which a lot of people don't realise, because I was just like, well, who's his pension for? I don't care, it's some old guy, it's not for me. And didn't realise it was my own money, and that's money that's been put aside and nurtured by yourself. Your employer contributes if you have a workplace pension, and then you're getting tax relief on it through the government, right? So there's 3 like contributors to this nest egg that's being built up for you,
Right.
and that sum of money is then invested into usually the stock market,
Yes.
Including other assets as well, depending on where you are in its maturity, right? But that is being invested for you, and therefore I was participating in the markets as an investor. I just didn't know,
Right.
so I didn't have any idea. And then a lot of my friends worked in finance.
Yeah.
I work in law,
Yeah.
right? So I would always like hear stuff. I'd be like, I have no idea what's going on.
Right.
I didn't understand any of the jargon. I felt a bit stupid. One of my best friends who I lived with for a few years, he was like, okay, he works in PE now, so he's like at the height of finance. He's literally end stage capitalism.
Yeah.
But he worked in corporate banking at the time, and he was like, oh, I've got some money I'm going to invest for myself, and
Okay.
I think he put it into like a robo advisor. I was like, oh, what's that? Okay, I want to do it too.
Okay.
And that was my first foray into investing. I didn't really understand, but I was like, oh, my mate's doing it. He knows about money. Let me try it as well.
Yeah.
Didn't fully understand what it meant, what I was doing, whether I was doing it through an ISA or anything like that. But that was my first foray. And then as I learned a bit more...
Just out of interest, did you invest directly into companies you researched, or did you just choose a fund?
So I did that too. So the
Okay.
the first time I actually did invest into
Yeah.
funds
Yeah.
by accident, which I know
Right.
is a sensible thing to do, but I did it
Yeah.
by accident. I didn't do it
Accident,
intentionally. And then when I learned a bit about investing, I was like, oh, I'm a legend. I'm going to pick the best companies and I'm going to put some money in and invested in individual stocks.
Sure.
Stupidly,
Yeah.
right? Because I wasn't ready at the time.
Right.
And did well on a few punts.
Yeah.
And then obviously had those gains wiped out, and I was like, whoa, I've lost all my money, what's going on?
Right,
I
okay.
didn't really lose all my money, but like it was that panic because I didn't really understand what I was doing.
Sure.
And then slowly after a few years as I learned, and this is when we were beginning our own financial journeys as well, and sort of educated myself on investing, what it's meant to be doing for me, how to do it properly, how to structure my portfolio.
Yes.
I then began to understand and invest properly. So I'd say now I'm a much more experienced investor.
Okay.
But yeah, it was like a stop-start, trial and error journey for me.
Yeah, of course. A learning experience like all the other stuff we learn
Yeah.
when it comes to financial literacy.
Yeah.
I started off in, it kind of started off in school when, I don't know if you remember, but me, Hodson Shihab, back in the days when we went to the, what was it called, T3 during break.
Yeah.
And I stumbled across this investing simulator.
Really?
Do you remember? I
You
don't know if you got involved.
were such a nerd in school, but I loved it. I loved
I was
it.
fascinated. So
I
it was the
loved it.
financial crash at the time.
Yeah.
It was the financial crash. All the stock prices were down. And I thought, wow, this simulator looks really cool. Let's all make a league. So we all joined this league. I don't know if you're part of it.
No, I wasn't. But, I remember you guys did do random things like that. Yeah.
Yes, I put this league, and what was it? I think I put quite a bit of money into Apple at the time.
Yeah, which
I was always
smashed it.
a big believer in Apple ever since I bought my first Mac. But yeah, that's when I stumbled across stock market investing, and I was fascinated. It was incredibly fascinating, like all the different factors that moves a share price and learning about all of that. And I did something similar to you. So I started investing when it came to real money. It was both my money and my brother's money.
Oh, wow.
Yeah.
Oh, wow, okay.
In an ISA environment. And I remember, obviously, because a lot of it was my brother's money, I was very conservative with what I was doing. So I would do a huge amount of research before investing into a company.
Yeah.
And the issue was, I invested some of the money into, it was a UK property developer. I think it was called Berkshire.
Berkshire Homes.
No, it starts with B.
Bellway.
No. They made St. George's Wharf. I forgot the name. Some UK property developer, high dividend, and we made money over like 2-3 years.
Yeah.
But the thing is, I literally invested about 20% of the money in that company.
Uh-huh.
The other 80% was just in cash.
Okay.
The entire time.
Okay.
Because I never got time to research all these other
Yeah.
companies, and I had a watch list. And I realised by the end of it, it was like, you know what, sure I made money over here, but all of this cash just sitting
Just,
around
yeah.
is just losing money.
Yeah.
And I haven't got time. So that's when I thought I just need to either give it to someone,
Yeah.
i.e. a fund,
Yeah.
or just invest passively again in a fund.
Yeah.
So that's what I ended up doing.
Okay, nice.
I haven't changed really since.
Yeah, nice. No,
I
same.
mean, yeah, that's what I advise clients anyway.
Yeah, majority of my investments are in passive/actively managed funds, basically.
Yeah. I mean, the important thing is the fact that it's diversified.
Yeah.
The fact that it is invested and it's just low cost.
Exactly.
Which is quite easy to find nowadays.
Yeah.
But yeah, we were just having a conversation before the pod that you're investing fully Sharia compliantly now.
Yes, yeah. So my investing journey, interesting, because obviously like learnt about money. I was like, okay, cool.
Yeah.
I think I understand money a bit now. I've been investing for a few years. I've made some money. I've got a business where I teach people about money. I think I know what I'm doing now. It was where my story was. And I was like, I'm Muslim. Which means...
You just had it dawn on you.
Because I just didn't understand that there were also extra stipulations when it came to how we must manage our money and how it's used and where it is and where it's put. And there's a higher standard when it comes to where you can invest, when it comes to faith-based investing. But ultimately, like, I firmly believe that I believe it's for the best, right? And it's a more ethical way to invest usually. And it's faith-based investing. But it's not actually that different. There's a few things that we avoid. Obviously, people generally know that Muslims don't eat pork and they don't drink, right?
Sure.
So off the bat, straight away, you can't invest in companies which sell alcohol, right?
Sure.
Or like as their primary source. So you can't invest in alcohol companies. We also don't invest in weapons manufacturing companies. No industries like porn or gambling.
So there's a complete screen out of those companies.
Exactly. But usually that's quite good because those companies are usually quite unethical. And then there's also greater governance standards, so how those companies are managed. And then a big thing, which is the one that I think separates people, is we don't engage as much as practicable in interest. So we try to avoid companies that are highly leveraged or make money from interest directly. So it means we avoid banks.
So financial
and other financial institutions. So I then had to be like, oh my God, like, I don't even know which companies are Sharia compliant or not. So then I went.
There's a lot of research to find
it was it's like going through that journey again and making sure that I was cleaning up my portfolio to make sure that it was actually aligned to my my personal values, which is how I've gone about it now. And I would say, as far as I know, and as best to my best ability, like, my money is managed in a Sharia compliant way. But that's not too indifferent to how most people invest anyway, because I still have investments in companies, in the biggest companies in the world, like the big US tech companies. A majority of them are Sharia compliant. But the word Sharia, I think, scares people.
Of course. I mean, it's just a screening measure, or essentially a fund that abides by Sharia law. Or was it Sharia law?
But it's effectively a higher ethical standard to investing. Because which is how I look at it now, because you're avoiding weapons manufacturing. I mean, I don't know how many people really get joy out of knowing that their investments are going into producing weapons that's killing civilians or people. And people, listen, whatever, like, everyone has their own, but that's generally the way I look at it. And industries like porn are very exploitative, like, forget about like the moral standard, right? Tobacco and gambling, alcohol, like, are seen as like stuff that damage people and their health. So avoiding those companies. So generally, I think it's just like an ethical screen.
No, it's a really interesting area, because one of the big things in Sharia compliant investing is that you can't any cash you can't earn interest on. However, a big thing about portfolios that are less risky or more risk averse is that they typically invest in fixed income,
bonds,
which does generate interest. So, I mean, doing my research on this a while ago, the Sharia compliant version of a fixed income fund is a Sukuk fund.
Sukuk.
How does a Sukuk fund work?
So I'm not a Sharia compliant expert, but I can try and give you a bit of a take. I think the way that it's structured is more about profit sharing than paying out interest. Because the idea of interest, which in Arabic I think is referred to as riba, which is broader than interest, the general idea is that it leads to exploitation and creating money from nothing. And that is what should be avoided. Because if I was to lend you money, and the opportunity for loan sharking comes in, basically. I lend you money, I don't share, and then because you need money to fund a certain business, right? I lend you money, and whether this business fails or not, you have to give me back my money and then some.
Right, I see.
You could therefore be in a position where you're really out of pocket, and I've not even shared in your risk.
Right.
I just have some money, and therefore I'm going to make money by having money.
Yeah.
Right?
Yeah.
And
Okay.
it's to avoid, in a very simple way, those kind of situations.
I see.
What Sharia compliant investing promotes, or the way that we engage, is that you share in the risk.
Right, okay.
I have money, you have an idea, right? We go after it. We can both make money from it, but I need to also participate in the risk if I'm going to participate in the upside.
Right.
That's the
Okay.
general understanding and some of the principles behind it. Does
That's
that make
interesting.
sense? Does that-
It does. The one thing does a Sukuk fund share a similar risk profile to a fixed income fund?
Yeah.
Is that the,
Generally, yeah, it's a lower risk.
Okay. So it sits between cash and equity, basically. So
Yeah,
it fills
yeah,
that gap.
yeah.
Okay.
Yeah, exactly. It's closer to fixed income.
Closer
Or
to fixed
I don't
income.
know if I have the authority to call it fixed income, but
Sure.
it's more akin to
Yeah, it's like
your fixed income asset.
Like a like for like, a
Yeah.
Sharia compliant version of it.
Yeah, exactly. Yeah.
That's super interesting. I do want to do more research on that.
But like I said, anyway, like I would encourage people to look into it. I'm actually going to put out some content on Sharia compliant investing, and because I'm not the expert, I'm going to bring some experts in.
Okay.
So I'm going to note that down because I'm going to ask the guys, can you explain how a sukuk is structured?
Yeah.
Yeah.
I'd like to know the answer.
Yeah.
But you explained it really well. I think I just need to get my head around it a bit more. Join us for part 2, which will be our next upload, coming very soon.